Morning, Fractal Effects team. Just in the middle of the morning session, so before we get started, please make sure you read the disclosure in the footer section of fractaleffects.com. If you're following along with us today, make sure you do in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. So we have a downside expansion model, and we had a mixed model sell. Today is Tuesday. There are no high impact news drivers. We came right back to this daily fair value gap. So if we're bullish, Tuesday usually sets the low. We took out Monday's low, and now we're sitting inside this daily fair value gap. We had a clean run up, so it did take out the to the upside first. Then it took out the to the downside with a clean here. We did create a our first bullish fair value gap, which we've tapped. So I see this going back at least to the the NWOG, the new week opening gap in orange. Usually when there's no high impact news drivers, the market likes to sweep back and forth and return back to fair value. Now fair value could be the new week opening gap right here, or fair value could be midnight open, true day open, which is right up here inside the NYC opening gap, which is also a breakaway gap. Meaning the market left it open and then just ran away from it. I'd like to see the market at least come back from, to the NWOG. So we've tapped this 5M fair value gap. We got about 3 minutes, 40 seconds left. You also have your 20 EMA. So I'd like to see it come all the way back up here into the blue zone. No 5M fair value gap here on US 500, but we have a similar setup. We swept the high first. No double break yet. So this could be signaling a 10 o'clock reversal here off the 4 hour and here off the daily, but we'll see. We've already returned to the blue zone here in US 500, back to the NWOG, new week opening gap. I'd like to see the same happen here before any other moves are made. So all the way back here, I believe the DSD low is in here as well. A lot of points of confluence. There's your DSD low, NWOG, blue zone, and your 20 EMA. So it has to come up here. It has to be pulled into this zone. And then here's your darker blue zone. Remember, the darker the zone, the more the market is drawn to it. But this is the low-hanging fruit. The NWOG is the low-hanging fruit. The 20 EMA, these two are the low-hanging fruit, especially since US 500 has already nearly hit all those zones. We're right at the bottom here of previous day's high. So delivered, NWOG, blue zone. Always aim for the low-hanging fruit on days like this. You never know what's going to happen. Without these high-impact news drivers, the market is very erratic. I see it coming at least up into the blue here, which I think it might already have. NWOG. A little bit higher. I want to see it actually touch the blue and touch the 20 EMA. It might even come to the midpoint, consequence encroachment, and then further up. But as mentioned before, that's the low-hanging fruit for the day. US 500 looks like it's making a run back up to the NYC opening gap. Just want to see what that looked like. Remember, these blue zones are magnetic zones that the market is drawn to and pushes from. And the only reason that that was the target was because we did sweep both sides. So that means anytime you sweep both sides of the manipulation move, be cautious, because it doesn't need to come back up here. It already swept out all these highs. It swept out London highs right before it dropped. All these highs were swept out right here by this candle, opening candle. And then it swept out all the lows. So it doesn't need to come all the way back up here. Today being Tuesday, we're bullish. We've already set the low. This could be a reversal. It's most likely that it will, at least up into this darker blue zone. But this is the low-hanging fruit. This is where either you roll your stops, take some off the table, or you close off your position completely. On a day like this, the market's going to be very erratic. We could still get a double break and a push down. Or at the very least, it could consolidate before pushing all the way up. That's why this is the low-hanging fruit. This is the safe bet. So on these days, remember, NWOG, new week opening gap. Either you got to paint that out by hand, or you need an indicator like the blue zone indicator that paints out the NWOG, the new week opening gap and the new day opening gap for you. Because on days when there's no news, no high impact news drivers, that's where the market is going to revert back to. Fair value. Fair value is either the new week opening gap or the true day open, meaning the market open at midnight. Midnight New York time. And it's also marked out for you. So that's sitting right inside the NYC opening gap. So the market could come all the way back up here. But if you haven't rolled your stops and you haven't taken some off the table at this point, which is, again, the low-hanging fruit, then your risk goes up. This is the safe bet. Got in here, and then roll your stops and take some off the table or close out your position. On these days, you never know. And remember, we're using divergence here. So this is US 500 on the right. As soon as US 500 hits that dark blue zone, I'm out anyways. So what's closer, US 500 to that blue zone or NYC to that blue zone? The beautiful thing about the blue zone indicator, it gives you all the levels when you're using divergence. Remember, if you hit a zone on one pair, you're gonna hit a zone on the other, but it doesn't have to be the same zone. But it still visually lets you know that, oh, that is this. So as this moves up, the NYC fair value gap and the blue zone could technically just be the midpoint of this blue zone. Either way, roll your stops or get out of the position here. That's the low-hanging fruit. Could it go all the way up here? Sure. There's true day open. There's your NYC opening gap. It can make it all the way up here. But that's not playing it safe. Remember, we're high probability traders and we're not gamblers. If you want to do this for a living, you got to stick to the rules. And the rules dictate aim for the low-hanging fruit on days like today when there's no high-impact news drivers. There's barely any news this week. It's going to be one of these weeks where the market goes back and forth, taking out stop orders, and it's going to go back to fair value. So that was a quick one today. We're going to still follow the market, obviously, but that was pretty simple. Manipulation move to the downside, 5-minute fair value gap, tapped, return to the blue zone. Remember, these blue zones These are highly algorithmic zones that the market wants to pull back to. The market is magnetically drawn to these blue zones, drawn to and pushes from. It's going to dig deep, stick around here, gesticulate. I'd like to see it wick the midpoint. Just going to zoom in here for a second to take a look. Yeah, we haven't quite hit the midpoint. Remember, the indicator draws out all the excuse me, consequence encroachment, the midpoints of all of these zones. We're getting some resistance here. Hit the 20, the NWOG, and the DSD low. Do I think we're going to rip right through here? Probably. Again, we have the darker blue zone up here, the true day open, and the NYC opening gap is a breakaway gap. So I can see the market coming all the way back up here. Is that the safe bet though? Not necessarily. So we've already rolled the stops. We're getting some resistance there now, but most likely just coming back into this fair value gap before continuing. Could even come back down and swipe sweep out these lows before continuing up. But our range is fully formed, so the next thing that it breaks will give us a confirmation. And that's the other reason I like to aim for these low-hanging fruit regions, because on days like this, you're going to see a lot of this back and forth. You could get uh, anywhere from 25 to 35% all the way up to your target, and then it could drop, sweep out the lows, and then come back up. It's just very slow. Maybe you're comfortable with that, but not me. I'd like to get in and out as quickly as possible. That was the quickest run. Wasn't a perfect 1 to 3, but at the same time, I know what kind of day this is. I know what kind of day this is going to be, and I just don't have the time for it. Low-hanging fruit, done for the day. But I'd like to see it come all the way back up into this blue zone right here. Another thing to remember is we did sweep the high first. So this is this is not only the NYC opening gap, this is actually the first presented fair value gap, meaning if it doesn't come back up into here now, it's going to later after 130. After 130, the market's going to be drawn back into this pool. But if you want to wait that long, that's fine. Just depends on your schedule. We're about 6 minutes away from 11. So this is the first 5M fair value gap that US 500 has created after doing the MM to the downside. So let's just mark that off. Ideally, you want to see the market stay above this if we're going to be bullish. But that's the other reason that they hold up one pair so the other pair can still fulfill the process. Now they've both created a 5M fair value gap and tapped it. Two minutes, 37 seconds left. So US 500 will most likely make its way right here into the blue zone, into the NYC opening gap, also the first presented gap. The question is, how far will NAS go? NAS could make it all the way up here, back to the true day open. But there's a lot of points along the way. Because look where the 50 EMA is. The 50 EMA, as US 500 taps it, you're most likely going to tap that region anyways. But where's the 50 EMA here on NAS? If we tap that, which will most likely tap around here, that could just be the midpoint of this blue zone and the DSD low. One of the things you're going to face in trading, and every professional, doesn't matter how good you are, every trader faces this. That's your exits. Now I have some of the cleanest entrances where maybe I'm in drawdown, I want to say not even 0.5%, 0.05%. Yet the exits, as mentioned before, I aim for the low-hanging fruit. I don't get greedy. Like, do I feel a certain way when I see the market come all the way back up here? No, I've trained it out of me. Doesn't mean I have the best exits. That's why we have our rules, though. You go for your 1 to 3, you roll your stops, you aim for the low-hanging fruit. Don't get greedy. People always talk about why traders fail, why 90% of traders fail. FOMO and greed. That's the other end of it. Fear of missing out, they jump in too early. Greed, they jump out too late. You got to find that happy medium. This is the most high probability area for the market to be drawn into. Could it push past here? Yes. Could it reject from here? Yes. So still just gesticulating. We got 3 minutes, 28 seconds left. Let's see if it leaves this fair value gap open. Another thing to remember is the DSD low and the DSD high, I use those as targets. Usually they're above us or below us, for example, here. Oops. Here on US 500, we never tapped it. It's sitting all the way up there. And there's the DSD low. So to the upside, if everything was clean, you want to aim for that DSD high. But when you're sitting below the DSD like this, that usually becomes my target if the market wants to push up. If the market is showing a manipulation move to the downside, a proper fair value gap, then I just aim for the DSD low. Low hanging fruit. Put 25 minutes left. Now remember, we caught this trade. Usually when we're this close to range formation, we wait, but we had all the telltale signs. So we caught this just before range formation. We were out just a little bit over, before 11 o'clock anyways. So sometimes you luck out, you get little moves like that. But ideally, we should have, right around this time, we should have waited for range formation if we didn't have a 5M fair value gap set up. And that's those two strategies overlapping. If you have a strong signal from the blue zone strategy, you take that. But if you don't, and you're close to range formation, then you wait for your confirmation and the spotlight strategy. I can already tell this market wants to push up, but again, we're done for the day. We're not going to get greedy. But I can see it coming back up to this blue zone. Let's just see if we get that push up. Just going to show you guys on the 1M. So that was the 5M fair value gap, came back into it. Remember, hit a fair value gap, create a fair value gap. It tapped it. You can't see the blue zone here just because it's on a smaller time frame. I think we might get one more dip down here before the market pushes up. A little over 20 minutes left in our stream. US 500 very close to that blue zone now. NYC fair value gap, I see at least tapping this. There's no way you get this close to the store, turn around and go back home. Now if you line this up, that's pretty much the midpoint right here. That's why this was my low-hanging fruit. Because as soon as this hits this zone, US 500 hits this zone, I would have got out regardless, but that's most likely just the midpoint here. Let's see though, let's see how far it goes. Could just gesticulate here as well. Gotta proceed with caution. So just a whole bunch of consolidation here, but usually consolidation leads to a manipulation and then a continuation. So I think we might sweep out these lows here, tap into this fair value gap, and then push up into this, at least into this consequence encroachment, the midpoint of this blue zone, and closer to the 50 EMA. As mentioned before, that's just still the low-hanging fruit. It could take forever to get all the way up here, most likely after 130. When you have a setup like this, and we go over, it's called the purple zone strategy. So we cover it in the purple zone strategy, but usually when that purple zone is formed in the afternoon, if you have a clean MM and you have not tapped the first presented fair value gap, excuse me, first presented fair value gap, which in this case happens to be the NYC opening gap as well, this is a very highly algorithmic zone that the market has to come back to and deliver fair value. So usually after 130, you'll see the market make a run up into this area. Not always, but keep in mind it's just highly, highly magnetic. There you go, there's the push down. That'll most likely take out these lows, tap deeper into this fair value gap, and then we might get a push up. But if we were just following the spotlight strategy today, you can see this range is huge. We probably won't even get a confirmation because even this drive up is all going to happen inside the range. So even though we've delivered, we're just going over this, watching this candle by candle to show you guys where it's going. Here it comes back down to sweep out these lows. And this is what I was saying. I personally don't have time for this back and forth. And it's only because there is no high impact news drivers today. Do I still think it's going to go up? At least, I'm just going to mark this out. See it at least getting up to here. So even US 500, as far as I'm concerned, has not delivered yet. Sorry, this all turns really slow when we go live. So we swept out these lows, tapped this fair value gap again. I think we might even dig in a little deeper, but let's see. Still just consolidating, about 10 minutes left in our feed. So we got out at the right time. Usually, again, consolidation leads to a manipulation and then a continuation, but we don't have time for it. I don't got time for this to get up here. Not on days like this. Play it safe. As mentioned before, I'd like to see a deeper sweep before this thing pushes up. We might even sweep all the way down here, but we'll see. We're already out. We don't have anything to worry about. Six minutes left in our feed. So right after this candle closes in 42 seconds, the next candle will be our last. Yesterday was more of a runaway that stopped and then dropped and then consolidated. So we didn't really take a trade yesterday. So this is the first successful trade of the week. It's good to get this, like when you get a good trade at the beginning of the week, then you can wait. Wait to see one of those easy trade setups. For example, you have an upside expansion model, you have a buy model, you manipulate to the downside first, it's a clean MM, you get a double break to the upside, you get a confirmation, bullish confirmation, the market's already bullish, your higher time frame is bullish. The 4-hour strategy is in perfect alignment, that higher time frame. Wait for those. And you should get one of those closer to like Wednesday. So let's look at this, for example, on the daily time frame. Or it's all fractals. That's why we're called fractal effects. What's happening on a smaller time frame is happening on a higher time frame. So there's your Monday. We're sitting in the daily DSD. Remember, this is a projection. This is a zone that we projected, I want to say close to like 2 months ago now. But we knew the market was going to come up into here. There's the midpoint of that DSD, and we teach you how to do this to make these bigger, higher time frame estimates. So there's your Monday, the green candle. Tuesday's supposed to set the low. What does it do? It comes right back into this daily fair value gap, taps it. Now if we close inside Monday's body, the body of Monday's candle, sorry, that keeps showing. We might have to even delete this just to get it out of the way. If we close in the body of Monday's candle, then Wednesday will most likely be a continuation to take out Monday's high. So everything's falling in suit on the higher time frame. Helps us with our weekly bias. 3 minutes left. Let's see if we break out of this consolidation in that time. So even though we swept out these lows, this in my mind is still not a consolidation manipulating candle. Remember, power of 3, consolidation, manipulation, and distribution. This just swept out these lows, but we closed inside. I want to see a body close out here. I want to see a proper manipulation move, possibly tap the midpoint of this fair value gap, and then push up. This is why I said I don't have time for this. That could take the duration of the next 2-3 candles. It's an extra 15 minutes that pushes us out of our window of opportunity. Remember, if we're not in a high probability trade setup 1 hour after the range formation, we're done for the day. We're not going to sit here watching this paint dry. One minute, 33 seconds left. Please make sure you check us out on fractaleffects.com. Please hit the subscribe button, turn on your notifications so you know when we're live. We're live Tuesday, Wednesdays, and Thursdays for now. Please check us out on the social medias, fractal.effects. We're always uploading new educational material, going over specific market dynamics, and even uploading the day's trade. Just going to check the economic calendar real quick. So tomorrow, Wednesday, no news as well. Thursday is the only day with news. So tomorrow might be something similar to today, where we're just aiming for the low-hanging fruit. $22 left. And that's our time. We'll see you guys tomorrow. Have a good rest of the day.